Right now, 220 new self-managed super funds are being created every single day. And at the same time, the ATO revealed that 93,000 SMSFs are in trouble because of outstanding tax returns, illegal withdrawals, and funds that were set up but never intended to be genuine in the first place. Now, most people hear that and think the ATO is cracking down, I better make sure my fund is compliant. But that's not the real story here. The real story is that most of these people didn't need an SMSF in the first place. They were just sold one. I'm a chartered accountant, and right now, my firm is shutting down more SMSFs than we're actually starting. I actually even have one myself, and I shut it down because it just wasn't worth the headache. Which is why, in this video, I want to show you why most business owners don't need an SMSF, who actually benefits when you set one up, and the simplest structure that gives you control over your investments without the cost, the compliance, or the ATO scrutiny. So why is everyone rushing to set up an SMSF? When you actually ask people, the answer is almost always the same. I want more control over my investments. They're sick of the industry fund or retail fund making decisions for them, and they want to choose where the money goes. And honestly, I get it. Wanting control over your financial future is good instinct. But what does control actually mean for you when you're setting up an SMSF? I'm going to assume it means picking your own shares or choosing your own ETFs and maybe even buying some crypto. So essentially, you want to be the one making the calls. Let's think about what you're actually saying though when you do that. You're basically saying you can pick investments better than professional fund managers who do this full time with teams of analysts and billions of dollars behind them. So if you genuinely think you can outperform those people, you should probably move to New York and start your own fund. Seriously. Because that's what you're claiming when you set up an SMSF to pick stocks. The desire for control is real. But for most people, an SMSF isn't control, it's just complexity dressed up as empowerment. So if most people don't actually need an SMSF for the reason they think they do, why are so many being set up? Because these funds don't just create themselves. Someone is recommending them and getting paid to do it. An SMSF costs anywhere from $2,000 to $5,000 just to set up. Then every year you've got the accounting, the audit, the tax return, and ASIC fees if you've got a corporate trustee, which you should. That's $3,000 to $5,000 a year in fees, whether your fund is performing well or not. Now, if you're the person charging those fees, that's a great business model. You're recommending the structure, you set it up, then you've got a client locked into a $4,000 a year compliance work for as long as the fund exists. I'll be honest, accountants, we love SMSFs because the fees are reliable and recurring. So when someone recommends you set up an SMSF, it's worth pausing and asking a simple question. Is this advice for my benefit or for theirs? I'm not saying every accountant or advisor recommending an SMSF is acting in bad faith, but the incentive is there, and when the incentive is there, you need to be the one asking the hard questions because the person selling you the structure probably isn't going to talk you out of it. Now, you might hear all of this and think, sure, but that's just one accountant's opinion. Fair enough. So let's look at what the ATO is actually seeing because the data paints a pretty clear picture. 93,000 self-managed super funds right now have outstanding tax returns. That's 1 in 7, and 20,000 of those have never filed a return at all. In a single year, $650 million was withdrawn or lent from SMSFs illegally. And when you look at where the problems are concentrated, it's overwhelmingly in funds with balances under $200,000. These are almost always small funds that were set up by promoters charging exorbitant fees to people who had limited knowledge of what they were actually getting into. The ATO's own words were that these funds were never intended to be genuine. So, this isn't a story about wealthy Australians gaming the system. It's a story about ordinary people being sold a structure they couldn't maintain by people who made money from selling it. And the ATO is treating the entire sector as a compliance problem, which means more audits, more penalties, and more scrutiny on every SMSF, including yours. So, at this point, you might be thinking, have I made a mistake? Or if you're considering setting one up, should you just rule it out entirely? Not necessarily. There are situations where an SMSF genuinely makes sense, but the criteria are more specific than most people are told. After managing over $250 million across super and investment structures, the one consistent reason I recommend an SMSF is to buy property inside super. Usually that's your business premises. You set up the super fund, the fund buys the property, and your business pays rent back to your own super. That's a legitimate strategy that you can't replicate in a retail or industry fund. But even then, it only works if your super balance is high enough to justify the running costs. If you've got $150,000 in super and you're paying $4,000 a year in SMSF fees, that's almost 3% of your balance going to compliance before you've even made a cent in returns. You need to be north of $500,000 before the fees become proportionately reasonable. And you need to be willing to stay on top of the compliance because, as we've just seen, 1 in 7 people can't. Outside of property, there's very little an SMSF gives you that a simpler structure can't. If someone is telling you otherwise, go back to the question we asked a minute ago. Is this advice for your benefit or for theirs? And this isn't just something I advise clients on. I've been through it myself. I've had an SMSF. I'm a chartered accountant who specializes in structuring. If anyone was going to make an SMSF work efficiently, it should have been me. But I shut it down because I got sick of the paperwork, the annual returns, the audit, the trustee resolutions, and I kept asking myself, what am I actually getting from this that I couldn't get from a simpler structure? The answer was nothing. So where does that leave you? You still want to grow your wealth, you still want to be tax efficient, and you still want to have a say in where your money goes. Those are the right goals. The SMSF just isn't the right vehicle for most people to achieve them. For most business owners doing 1 to 5 million in revenue, better structure is an investment company, sometimes called a bucket company. Instead of pulling your profits out of the business and paying up to 47% personal tax and then trying to invest what's left through an SMSF, you divide profits across to a separate investment company and pay 25 or 30% company tax. That money stays in the company, you control where it's invested, and there's no audit, no sole purpose test, and no preservation rules locking your money away until retirement. If you need access to that capital, you can still get it. And if you do want more flexibility inside of super without the SMSF compliance burden, talk to a good financial advisor like us about a wrap account. You get more control over your investment selection than a standard retail or industry fund without the annual compliance audit, the trustee resolutions, and instead of paying annual compliance fees, you can put that money towards getting actual financial advice to improve your family's financial position. If you've watched my video on bucket companies or family trusts, this is the same structure I keep coming back to because it's how I personally invest. And it's what we recommend for the majority of our business clients over an SMSF. Look, the goal here isn't to talk you out of an SMSF. It's to make sure you're not paying for the complexity you don't need. If you want us to look at your situation and tell you whether your current structure is actually working for you, or if there's a simpler way to get the same outcome, there's a link below to book a call with our team. And if you want to go deeper on the bucket company side of things, how it works, the tax maths, why we use it for most of our clients, I've broken it all down in this video here.